Today we're going to be talking about SoFi Technologies. We're going to take a look at this bearish article about 3 fintech stocks, one of those being SoFi, and the bear case against SoFi Technologies. And finally, I want to talk about Anthony Noto, the CEO of SoFi Technologies, and some recent buys he has made into the stock. So if you enjoy the video, drop a like down below, and if you want to see more videos like this one, make sure to subscribe. Year to date, SoFi Technologies is down 28.5%. However, a lot of that has to do with the fact that we saw a spike up in stock price at the end of December that sent the stock over $10 per share. In the last year alone, the stock has basically traded sideways, up a little over 1%, with a fairly large amount of volatility along the way. At one point trading over $11, and then a few months later trading all the way down around $6.50. And really since the start of March, we have seen SoFi trading in a range of anywhere from $7 to $8 per share. And one of the first things that this article points out is a big reason why SoFi has struggled in 2024, and that is its sensitivity to macroeconomic shifts. The first concern that this article brings up is around inflation and the effect that it has on interest rates. We can see that inflation hit 9.1% in June of 2022. However, by June of 2023, inflation had dropped all the way down to 3%, and over the course of the last year, it stayed level around this 3% mark, currently sitting at 3.4% as of April of 2024. And the way the Fed is looking to control inflation is by increasing interest rates. From February of 2022 till August of 2023, the Fed took interest rates from near zero all the way up to 5.33%. However, since August, they have held this rate steady, and they're doing this in an attempt to get inflation down to around 2% without having a large effect on the overall economy. What I find very interesting about this article is they actually find the Fed cutting interest rates as a threat to SoFi's business because it will reduce their net interest income. But personally, when I look at SoFi's business and all of the products that they offer, yes, their banking business could have a negative effect by the lowering of interest rates. However, they have multiple other facets to their business that would all be impacted in a positive way from the lowering of interest rates, such as personal loans, mortgages, private student loans, refinancing of student loans. These would all have a positive impact if the Fed were to lower interest rates. And the reason I would expect all of these businesses to have a positive impact from the lowering of interest rates is due to the fact that if we saw interest rates come down, there are a lot of consumers that currently have very high interest rate debt, whether it's student loans, mortgages, personal loans, car loans, whatever it may be. They have very high interest rates if they have taken out these loans in the course of the last 1 to 2 years. And what that ultimately means is if the Fed were to drop interest rates, they could potentially get a lower interest rate on that debt. And that means they would be looking at companies like SoFi as potential targets for refinancing some of their debt. And this is why I think over the course of the last couple of years, it was so important for SoFi to build out the banking side of their business. They previously were very dependent on loans, especially known for their student loans. However, as they have built out these other areas of their business, it has helped them diversify away some of this risk around macroeconomic concerns. Another concern that this article brings up is the raising of consumer loan delinquencies. And this is a very large problem, not only for SoFi, but also the broader economy in general. And the delinquency rate is the amount of debt that is past due. It's calculated by dividing the total number of delinquent loans by the total number of loans held by a lender. And over the last 2 quarters, we have seen a delinquency rate which is over 2.6%. And this is the highest delinquency rate that we have seen ever since 2012, and is even higher than what we saw in 2020 when the complete US economy shut down. And this is especially a concern because we are seeing these rates trending in the upward direction. Back in 2012, we were seeing these rates actually trending in the downward direction, and the last time we saw delinquency rates trending upward was back in 2007 when we started seeing rates increase in a very dramatic way leading up to the Great Recession. The only difference for SoFi Technologies versus the broader economy me is that SoFi tends to attract a lot more solid customers, especially when it comes to credit scores. For new direct deposit accounts, in the first quarter of 2024, the median FICO credit score was a 744. And depending on the chart that you look at, this is considered in the very good to excellent range. These are consumers that probably have higher incomes as well as consistently pay back their debt over time. And because SoFi targets these higher credit score individuals, they have a lot lower delinquency risk on these loans that they're offering. And despite some of these broader economic concerns, there is one man who keeps buying SoFi stock, and that is the CEO, Anthony Noto, who bought another 28,000 shares on May 24th of 2024. And this wasn't the only buy from Anthony Noto this month. We saw him buy 28,800 shares on the 24th. We saw him buy another 28,900 shares on the 23rd and another 28,700 shares on the 3rd of May. And all of these buys were at very similar prices to where we are sitting at right now: $6.92, $6.91, and $6.90. If we look back to November of last year, he also made buys very close to this price. $6.50, he bought 22,500 shares, and then at a price of $6.77, he bought another 44,000 shares. And it seems like Anthony Noto really likes buying shares of SoFi in May. He made 4 purchases last year in a range of $4.67 all the way up to $5.11 per share. And at that $4.67, he bought over 100,000 shares of the company. And he even bought 50,000 shares of the company at $4.73. When we look at all of these purchases from Anthony Noto, it really looks like he loves buying SoFi shares anywhere below $6. However, he's still happy to pick up shares in that $6 to $7 range. So personally, I actually want to see SoFi drop down to around $6 before I start adding shares. What I like doing with this company is selling puts below and getting into the stock when they get exercised or if they get exercised. Right now, with SoFi trading around $7 a share, I'm not super interested. I want to see it again trade a little bit lower so I can sell a put below, get a little bit of option income, as well as potentially get exercised at a fair price. Right now, I think it's just a little bit higher on the end of where I personally would want to get into it, because the cost basis I have on some of my shares is around $5.50. So right now, I'm kind of just looking, sitting on the sidelines. I'm not selling calls either to collect a little bit of option premium. I'm kind of just waiting. I really only start selling calls when SoFi is trading around that $9 to $10 range. That's where I feel comfortable selling calls at, because then I feel like I lock in a good amount of profit on the upside in terms of share appreciation, as well as there tends to be a lot more premium when we see the stock spike up in a major way, like it has done a couple of times over the course of the last year. But as I always say, do not buy a company just because some random guy on YouTube talked about it. Do not buy a company even though the CEO is buying into that company. Make sure you are doing your own research and looking into companies that meet your risk tolerance as well as your time horizon. With all that said, I hope you enjoyed the video. If you did, drop a like down below. And if you want to see more videos like this one, make sure to subscribe. And as always, guys, have a wonderful rest of your day. And for the joke of the day, why was the tourist disappointed upon seeing the Liberty Bell? Check the comments down below for the answer. Thanks for watching.